All right. Today is 16th of September. What day is it today, Isaac? Monday, Tuesday, Wednesday, Thursday, Friday. What day? It is?
Monday.
No, it is Tuesday. Tuesday, the 16th of September, with me, Kenny, and little Isaac here with lots of growth. And we're here with our pre-market for Tuesday. Yeah, that's the day. So first up, we're gonna report what happened yesterday. Did we end up with a win? Did we end up catching a loss? Then we're gonna go into the scorecard, and then we're gonna go into the market analysis. Who's that over there? That's Gabby. Okay, so from yesterday and tomorrow and the day after that. So let's go into our review of Monday. So we hit a stop loss. Yes, we did. I can lose. I know how to lose. And in fact, I did lose. So I took a sell expecting the weekly open to be my management level. And it was a very good management level, except that the stop loss was hit before my alert was triggered. You can see that it was quite close. But in this whole trade, oh, hi Mick. Okay, all three of them are here. Okay. Can you please go downstairs with mommy? Go. Hey, look, Coco, what? Oh, Coco run already. Okay. So in this trade, it was a ranging trade, a consolidating trade. We know that. And we were quite happy to go down risk and experience what it's like to continue the momentum. Because I took Friday off with a paper trade. It was going to be an SL. And then on Monday, I just came back and I decided to commit with a consolidating trade. But I got the bias wrong. Let me tell you why I got the bias wrong. Because the price was so close to the weekly open, I chose to use that. However, when you look at my Asia zone, the price was clearly above the Asia zone. This was a buyer. And when I look closely, M30 actually locked above my resistance, and it was above the resistance the whole freaking time. So a buyer would have been much preferable with the down trigger on the red line. So we managed some profits, floating profits, maybe 0.2R, 0.3R, whatever it was, but it just reversed and went into negative. I must share that after 2 candles, the second candle, I was already 70% sure that this wasn't going to go into a seller. Then the dip came. Of course, we're happy. But the moment that this candle turned white and exceeded that high, about 0.3R in negative, I was 90% sure that this was going to be a loser. But again, this was not in my protocols of execution. So I decided to just let the trade run out and let my alerts take me out. And the alert was only triggered at the point that my trade hit the stop loss and the next candle after that. So, and the fact is, the price did continue upwards after that for a good buy recovery. Again, exiting early is not part of my protocols. Taking a recovery trade is also not part of the protocols. There's only one trade a day, one and done. So I'm quite happy with how this trade turned out. I followed my processes and I received the outcome of what the trade was supposed to be. Now, what I want to share as well is what were the signs that I wasn't going to be performing all that well? It's actually in the scorecard. You look at the scorecard. I've been going at the high 90s, and then on Thursday I went to 70. Friday was 70 again. But Monday, yesterday, was 55%. And part of it was waking up late. Guys, please go downstairs. Part of it was waking up late. So my pre-session on Sunday night, I was going to bed late. And then I woke up very late. So I didn't have a good morning session. And that's why I have a 55% daily habits. My scorecard was still high because I was following the rules. But evidently what undid me was having the wrong bias. Having the wrong bias was down to having the incomplete daily habits. So that is that. Today, we're a bit more prepared. Tuesday. Again, we've deleted our school runs because the boys are still on holiday. It's a bit of a long holiday week here in Malaysia. Today is Malaysia Day. Happy birthday, Malaysia. But I was out early last night, like 11 plus. I was out, and this morning we're up slightly late, but not like 10 a.m. late. We are doing this recording at like 10:25. So we're doing the pre-market before Asia. Yesterday we did the pre-market before London, so we delayed a whole day, a half day actually. So there were reasons for me to skip the market and really take the chill. That's all in hindsight, but I'm pretty okay with what happened yesterday, especially because I downsized to 0.3%. So today I reflected on that. It's been a good day. It's been a good holiday with the boys. There are not a lot of different tasks I need to do because I need to stay home with the boys. We did our meditation this morning. We did our trading terminal check this morning. And we're doing our me versus me now. So already we're at a 73% habits. Whether that's going to make me feel good or bad, I'm going to know, right? And you guys will have your own routines. It will be down to what you feel, whether you're ready or not ready. Aware of my emotions and stress levels. It's as good as it gets when the three boys are at home. You're going to have to yell a little bit. Get out of here, boys, you know. But it may be different from person to person. My age. I know my age is in trend. I know my age is in breakout. And we expect the breakout to continue happening until we see a very nice hook and then the trend reversal comes in. Mentally prepared and balanced and patient. I could say that today as well. Yesterday I was patient, but I was patient in the wrong places. Or rather, I was a little hasty in setting my bias. Detached from the outcome. That was good. Yesterday I was detached. Today I pretty much detached as well. I'm looking forward to just applying these processes, completing this pre-session, and then going into the forecasting with a clear mind. I know I made a mistake yesterday, but that's not going to impact me with my setup today. C game triggers. Well, we've caught one now. Previously I was talking about my error rate. My error rate was about 40% for the last year. I'm looking to halve that or even keep that under 10% to make sure I perform well. So this month we've hit the first error, the first missed bias, and that is now going to be on the mark for the rest of the week. So I'm gonna be aware that I made an incorrect call on the bias yesterday, but I'm not gonna make that fizzle out or spiral out of control. I'm gonna make sure that my other C games don't come into play. One of my C games from previously was trying to out-trade the range, trying to manage my trade in the range. I noted all of that movement yesterday, but I was nowhere near trying to execute. Of course, I did feel upset that I couldn't execute because I did know that I was going to lose the full R. But my emotions are in check. I wasn't grumpy, I wasn't on edge, I wasn't anxious. I was just sort of resigned to the fate that it is what it is. Let the trade play out. So with that in mind, I think like that was a good part of this process. I was not pressured into making a move that I'm not supposed to make. And of course, over trading. It was clear that yesterday was going to break out of the range and continue upwards, which was the move that we expected on Friday, right? So that didn't happen on Friday. It happened Monday. And sometimes I would have got into the market and just like, hey, it's my recovery. I'm supposed to get it back. But again, that didn't happen yesterday. So we're going to make sure that that doesn't happen again today, either today. We're going to stay far, far away from that. And we're going to decide, are we going to go in Asia or are we going in London? We're gonna take that call right now. So distractions remove. I can't quite take that, can I? The boys are here, but I'm focused with you guys. The boys are downstairs now. Let's get through my forecasting quick and easy without making a mistake. All right, now we're back into the market. It's 10:30 a.m. We've got 30 more minutes before this candle stops and we form the Asia range. So that's why I'm just leaving it anywhere and everywhere. We'll leave it about there. Okay. So what's happening right now? When we go back for a couple of weeks, it's been going on an uptrend. There was slight consolidation for part of the week, and we're continuing this trend. We do take note that we've breached the Tuesday high lows. We've breached Friday as well. So we're still in the trend. We're still in the trend formation zone. We're now into Monday. So Monday could be proving to be the waiting zone before it continues pushing. So what could happen? Well, the price could come back to 9 and probably retest the high of Tuesday or slash the high of last week before it shoots upwards again. For Asia, we're looking for 187 pips or 1870 points. For London, we're looking for 155 pips, 155, 150, 1550 points. So 187 down is going to be around there, which is going to be near within Tuesday high. And 187 up is going to be pushing into the 3700 range. Gold is going to 3700, like it or not. So I'm on a buy bias. I know that the trend is continuing, but I'm going to take a call now and say that we're going to skip Asia today. This market is not quite set up for pushing upwards yet. And even when it does, we'll come back in London and catch it in London. Because should the price push up and finish 1800, the 9 MA would be landing outside of your previous high. And that will allow us to take the price back up on the rebound, on the continuation. So I'm going to do my markups on Asia. Going to here. And we're going to draw a little line. So this yellow, we'll put it up there. Red we'll put here. So already on M30, we see that my MA is telling me that the price is continuing. But because of the lag of the 9 on H1, I am expecting the price come back before shooting upwards. All right. So that is the markup that we have today. And if we go on Asia, that is what it's going to look like. It's going to look like it's going to hit my stop loss before continuing up. So that's why I'm taking the call to defer my entry into London, which would mean that I'll be taking it as the price comes from the low back into the top. And that would mean that our trade will finish within the Asia trade. What's the flip side? The flip side is the price might just shoot away right there, right now. And in which case, we'll have to reevaluate the market right before London to take a call on where to position our buys at that point. Failing that, we'll have to take a paper trade for London and call off today. So that would be the flowchart that we're in today. And one last note, because now we're back into trend, we're going to go risk up to 1% again. 0.31%, 0.31%. Is that too big of a gap? We'll find out. But as it is, this is what we have for today. We are back to our scorecard. We've got a setup and forecasting done. The A+ plans, we've laid it out. Again, it's trending, so that's where our edge is. Yesterday we got it wrong. We tried it, we called an A+ plan. It turned out to be incorrect. It's just what it is. We do make mistakes. Visualizing the outcomes. So we visualize the outcome should the price come back to us and then go. We've also visualized the outcome should the price just shoot away and we got left behind by the bus. So all in all, I'm going to call that we're in sync. And we're in sync with our me versus me challenge. Because from yesterday's experience, I've now realized that I can manage my emotions better in range. I can continue trading even with the downsize, and downsizing does really help. So today we're gonna improve ourselves one little bit more and try and continue trading after hitting a stop loss and upsizing back to 1% because the market conditions allow it. And that should be it for today. I'll see you guys tomorrow in the Wednesday me versus me challenge. And until then, this is Kenny. Lots of growth. Check it out.